Very good afternoon to all of you. Welcome to practical session number 23 for the year 2024. And myself, Sujit Kakar. Today is Saturday, 15th of June 2024. Before we move ahead, let's also get done with some basic formalities. So make sure you people go through the disclosure, which talks about the representation risk disclosure, the risk involved in the market, and also about the copyrights. I would also like to add that we have just started with our a WhatsApp channel. So you can join this channel by using the QR code, which you can see on your screen, or even if you go to the description, the link is available. We will be using this channel to update you people with our latest videos, the schedule for these live sessions. If there are any updates, we can update you there. And plus, also, if we come up with some offers, we'll also be posting those offers on that channel. So that will be, an easier way to get all the updates and information regarding our videos, regarding our schedules. So do ensure that you do join this channel. So let's get started with our today's session, which will be practical application of demand supply methodology. Now, our demand supply methodology course is now available as an absolutely free course. In case you have not yet gone through the methodology, the links are available in the description. I would also add that during the session, if I talk about any videos, any links, any documents, all those links will be available in the description. So before we get started with our today's analysis, we do have one uh, practical example which we took during our session number 13th, which was on the 31st of March, and we got the fill on the 30th of May. And that is where we talked about that we don't have any opposing zones. So the only thing we can do in this trade is keep trailing onto it as long as we can. And we said we'll keep it as an open trade and see how that trailing would work. So you can see that now we do have a formation of a new demand area, which is this rally based rally. Yes, it has been tested, but you can now have your trailing stop loss below this. So now the worst case scenario is if the prices they go back, you still get a very small profit. If they continue with the move to the upside, we can even have bigger profits. And I would also like to quickly go through some of the examples which I showed you the last session, just to see how they progressed, because I'm pretty sure all of you would remember the last week was very volatile, especially during the election result day. Yeah, the markets they crashed like anything, and the last session I showed you that crash was basically our opportunity to find really nice trades, and I showed you some examples of the trade setups that I shared with you. So let's also quickly, again revisit them and see what happened with those. Uh, Example. So this was our session number 12 for the year 2024, and you can see on the election day, election result day, on which was on the 4th of June, we came into the zone, and in about 1 2 3 4 days we hit about 3:1. We are still trading at around 2:1, but this was a type 2 type 3 trade for us, wherein getting the entry would have been a challenge unless and until you were doing it as a type 1 entry. And the other one which I also shared with you was session number 21. So just give me a minute. Let me also bring that up for you. So you can see this was session number 21, and again on the 4th we got the fill when the markets they crashed, and you can see in about a week we have almost hit our this could have been our target, which was a little over 4:1. And I just wanted to show you that if you're following your rules and keeping your emotions off, it can be very fruitful for you. But if you're more into emotions, then when the markets are crashing, like I said the last session as well, pressing that buy button would have been a very big challenge. But that is what you have to learn eventually, because that is where you get your the most beautiful reward to risk ratios in a very short span of time. All right, so that takes care of some of these examples which I also shared with you the last session. And now that we are done with that, we can start with our analysis for today. So let me bring up the symbol that we'll be analyzing today. Great. So whenever we talk about trading, always say trading has to be a very mechanical and rule-based process. And why it should be mechanical and rule-based, I have explained this in a video. The title of that video is How to Start Trading. In case you have not yet watched the video, the link is available in the description. Go through that video. The process that I've explained, apply it, because there is no bypassing it. The more number of times you go through that process, the more rule based you start taking your trades. But if you're not going through that process, then I'll say that you'll see majority of your trading decisions will be based on emotions. So to overcome those emotions and be a very mechanical and rule based trader, do follow that process. That is going to be a game changer for you. So yes, coming back to Since trading has to be mechanical and rule based, what I've done is I have created two documents for you. The first one is your trade plan steps. You can also call it as the flow chart or the walkthrough. Now, this guides us what we need to do as a demand and supply trader step by step. Now, all these steps, they have their own elaborate rules, and those rules are available in the rule book. Now, this rule book is a conservative approach. With time, with experience, you can definitely make modifications to it to make it better suit with your personality style. So, what is our step number one whenever we start planning our trades? Step one is we need to define our trade purpose. And what do we mean by trade purpose? Trade purpose implies the expected duration of the trade, which is from the time you enter the trade to the time you exit the trade. Now, why are we starting with the trade purpose? The reason is when we do our analysis, the charts that we use, they are time-based charts, and we have n number of time frames available to us. So the very first challenge is that out of these n number of time frames, which time frame should I be using for my analysis? That's the very first challenge. And to overcome this challenge, we do not start by randomly selecting any time frames. We start by first defining our trade purpose, because logically, the longer I want to be in a trade, the bigger the time frame I should be using for my analysis. And similarly, the smaller I want the duration for the trade, the smaller the time frame I should be using for my analysis. So defining your trade purpose basically helps you in understanding what time frames you should be leaning against. So what I've done is I have divided these trades into four different purposes. We call them as hourly income, daily income, weekly income, monthly income. Hourly income implies a trade where my expectation is this trade can last for an hour or few hours. Daily income, a trade which can last for a day or few days. Weekly income, a trade which can last for a week or few weeks, and monthly income is a trade which can last for a month or few months. Now, by definition, I say daily income is a trade which can last for a day or few days. But if you are trading markets which are not 24 hours market, then I'm pretty sure all of you would have experienced whenever the market opens, some symbols they gap up, some of them they gap down. Now, because of this gap up, gap down, what can happen is if you get a gap in your favor, you might get profit, which is more than what you were expecting. But if you get a gap against you, you can also lose more than what you were willing to lose on that trade. So we understand that whenever we keep a position overnight, it has that inherited overnight gap risk, which we should be avoiding initially, because when you're learning something new, you're lacking experience. You only get better and better with the time and experience. So that is where initially your hourly dailies should be done strictly as intraday trades. Don't keep them as overnight trades. Now for weekly monthlies, we are not anticipating to get the exit the same day. So here we have no choice, but we'll have to keep those positions as overnight positions. But as you start having more and more experience, eventually if you want to add daily incomes into overnight trades, it can be done, because like I said, daily income is a trade which can last for a day or few days. But initially I would advise you to avoid keeping daily incomes and hourly incomes as overnight trades, so that you don't get stuck in case, if you ever get a gap which is against you. So let's assume I want to plan monthly income trades. Now once I have opted my purpose of trade, what is going to happen? From the rule book, I'll get to know what time frames I should be using. So if you go to page number 28 on the rule book, we start with the topic which is multiple time frame analysis, because demand supply methodology is not based on single time frame. Demand supply methodology is based on multiple time frame analysis. Now, what are the multiple time frames we use? We use a minimum of 4 different time frames, and we call them as the higher time frame HTF, intermediate time frame ITF, lower time frame LTF, and the refining time frame RTF. Higher time frame is used for demand supply curve analysis. Intermediate is used for trend analysis. On the lower time frame, we identify areas of demand and supply for our entries and exits. And the refining time frame can be used for multiple purposes, like fine-tuning the zone, different kind of entries, like your type 2 type 3 entries, or in case we need to apply some additional rules, that is also where this time frame can help us. Next, what are the 4 different purposes of trades? We have already talked about it. What is HIT, DIT, WIT, and MIT? So now the question comes that for every purpose of trade, what will be my 4 different time frames? You get the answer from this table. Like in this example, I want to plan monthly income trades. So as a monthly income trader, my time frames will be monthly, weekly, daily, 60. Monthly will be the higher time frame used for curve analysis. Weekly will be the intermediate used for trend analysis. Lower time frame will be daily. That is where we get our SETS from. SETS stands for stop loss entry target and size. And 60 minutes is going to be my refining time frame, which can be used for multiple purposes, like fine tuning the zone, type 2 type 3 entries, or in case I need to apply some additional rules, that is also where this time frame can help us. Now mind it, this table that I've given you on page number 31 is for NSE market, which is open for a very short duration, about 6 hours, 15 minutes during the day. If you're trading markets which are open for longer durations, like your commodities, forex, cryptos, then you can refer to this table, which is on page number 32. So coming back to, because I want to plan monthly income trades. Now I know my time frames, which will be monthly, weekly, daily, and 60. So my challenge number 1 is taken care. I know the time frames I'll use. I also know what analysis I need to do on each and every time frame. Now the next challenge is, yes, I do know my time frames, but on NSE, in this example, we have over 2000 plus companies listed. So it's not humanly possible that every day I sit and analyze 2000 companies. So next step is to have a process in place which can help you in selecting some symbols, because if you have a small list, you can do your analysis almost every other day. But if you have to analyze 2000 plus companies every day, I'm pretty sure nobody would want to do that. So how do we get that small list? For this, we use certain computer programs which are called as scanners or screeners. And the way these computer programs, they basically work is that we input certain conditions into them, that these are the conditions I'm looking for. And then the computer program identifies that out of these 2000 plus companies, which companies are matching with those conditions. And whatever is matching with those conditions, it gets shortlisted for us, and that is how we get a small list. Now, very, very important, irrespective what scanner or screener you're using, whatever results you get, do not assume that you will blindly buy them or you will blindly sell them. That cannot be done. The job of the scanner is not to tell you what you have to buy or sell. The job of the scanner is, from a bigger list, help me get a smaller list. Once I have that small list, then I'll have to analyze each and every symbol individually, and whatever matches with my trade plan is my opportunity. Whatever doesn't match with my trade plan, we simply skip it. So a few examples of these scanner screeners. Example one, if you go to my website under the free tab, you will see I have created some scanners for you, which are based on some moving averages. They can help you in shortlisting symbols. Second example, if you search on my YouTube channel scanner, you'll be able to find few videos, different scanners, different logics. You like any of those, you can use that. Third example, on my YouTube channel, search for sector analysis. You'll be able to find a video on sector analysis, which can again help you in shortlisting symbols. Fourth example, on my YouTube channel, search for top-down analysis. You'll be able to find a video on top-down analysis, which can again help you in shortlisting symbols. So these are 3-4 different examples, but you're not restricted only to these 3-4 different ways of shortlisting symbols. Let me show you a few examples here. So like I said, once you go to our website, under the free tab, you have option which is stock screener. And because I opted, I want to plan monthly income trades, I can run the long scan and the short scan. So here you can see the long scan is shortlisting 2 symbols for me, and the short scan is shortlisting 12 symbols for me. Now, very important. Just because I got these 2 symbols as a long scan does not mean I will blindly buy these 2. Similarly, just because I got these 12 symbols as a short scan does not mean I will blindly sell these 12. So the job of the scanner was that, since I can't analyze 2000 plus companies, is to give me a small list out of these 2000 plus companies. And what it did was it gave me 2 plus 12, which is 14 symbols to look into. So now I'll analyze these 14, and out of these 14, if anything matches with my trade plan, I have an opportunity. If nothing matches with my trade plan, I don't have any opportunity for today. And again, at times what can happen is the list might be a very small list, like you can see today, or at times maybe no results are getting generated because nothing is matching with these conditions. Or even otherwise, if you want that I should always look at a little bigger list so that my probability of finding a tradable opportunity increases, then what you can do is, you can see that in this scanner I've given 5 different conditions. You will disable the third one, you'll run the scan again, and I'll do exactly the same thing here. I'll disable the third one and run the scan again. And now you can see that initially it was only shortlisting 2 symbols for me for the long scan, but now it is giving me about 23. And for the short scan, now it is giving me about how many? 31. So we have 31 plus 23, which is 54 symbols to look into. So now you can see it's not that you have a list of 500 or 600 symbols. It's still a very small list, about 54, which can be easily analyzed, I'll say, in about half an hour, 45 minutes. And this is not the only screener available. If you go to the screener section on this website, you can see you have over 150,000 scanners available on this particular website. Some are based on fundamental analysis, top love, candlestick patterns, and then you have your range breakouts, you have your bullish scan, you have your bearish scan, then you have your intraday bearish, intraday bullish, crossovers. So n number of scanner screeners are available to you, and this is just one website. If you do a Google search, you'll be able to find n number of websites, n number of scanner screeners. Whatever you feel is the right fit for you, you can use that to help you get a smaller list. Now in this example, like I said, we got a list of about 54 symbols, but once you start analyzing them, there are few challenges which you will realize. Challenge number 1 is, you will realize that out of these 54 symbols, majority of the symbols might not have a quality demand zone or a quality supply zone on the lower time frame. And if you don't have a zone, you can't plan a trade, which basically implies you're wasting a lot of time analyzing such symbols where nothing tradable is available. And the second challenge is that some of these symbols which might have some quality areas, those quality areas might be far away from the current market price, which means you'll have a longer waiting period before the prices are back. And during that waiting period, whatever price action develops, it can even disqualify the trade setup for you by the time it is back into your zone. So how do we avoid these challenges? For this, we have created two custom built tools. One is called as the alert service, the other one is called as the screener. Again, these are scanner screeners, the only difference being that these scanner screeners are purely based on demand supply zones. These are not call giving or tip giving services. These are scanners to help you scan and shortlist symbols purely based on formation of demand and supply areas. Now, if you want to understand them better, the link through to the walkthrough videos are available in the description, but I'll quickly show you example of these two as well before we move on to the next step. So I talked about alerts. So what alerts basically do is, as soon as you have a formation of a zone on the lower time frame, it immediately notifies you. And we have demo channel for NSE alerts, we have demo channel for MCX alerts, we have demo channel for Forex alerts, where we provide you alerts for half an hour during the trading session. So on the NSE channel, you can see these are the alerts which were generated on the 14th of June. So here you can see at 11:15 there was a rally based rally structure on Bajaj Auto on the 15 minutes time frame. This is the proximal value, this is the distal value. Now this is an alert on the 5 minutes chart, on the 60 minutes chart, on the daily time frame. So you can see as and when these zones are getting formed, you immediately keep getting these notifications. Again, remember, just because you're getting these notifications does not mean you can blindly buy sell at these demand and supply areas. The job of the alert is in real time to update you on which symbols, on which time frames these zones are getting formed. Once you get that information, you will have to match that zone with your trade plan. If it qualifies based on your trade plan, it can be an opportunity for you. But if it doesn't qualify based on your trade plan, you simply skip it. So that's alerts. And similarly, we have another tool which is called as screener. So here you can see I've applied screener to one chart and I've given 40 symbols. And then I'm telling the screener that out of 40 symbols, find the symbols for me where the proximity of the current candle is within 1% to a demand area or a supply area. So now you can see the screener is telling me that yes, you have given me 40 symbols, but you don't need to analyze these 40 because only on these two we are close to demand areas. That is why they are highlighted. So if I go to Titan, you will see that on Titan, we will be close to a demand area, which is why it is shortlisted for us. So let's give it a few seconds for the indicator to load. So here you can see we have a demand area. The current candle is pretty close to it. Similarly, if I go to Reliance, here also you will see that the current candle will be close to a demand area, which probably is this rally-based rally. And that is why it got shortlisted for us. So this is what the screener does. So screener is shortlisting based on the proximity to the zone, and the alerts are shortlisting based on the formation of the zone. So the alerts is always taking the current day into consideration, but for the screener, whether the zone was formed today or a week ago or a month ago or a year ago or 10 years ago doesn't make any difference. As long as we are in that proximity range to a demand area or a supply area, it will get shortlisted for us. So again, I just showed you a number of ways of shortlisting symbols. Choice is yours, how you want to shortlist them. Process can be as simple as I don't want to use any of these scanner screeners because I want a small list. I will only be analyzing my Nifty 50 stocks, or maybe I have my own favorite list of stocks which I might want to analyze every day. So choice is yours, how you want to get that small list. But once you have that list, you need to analyze them one by one. Whatever matches with your trade plan is your opportunity. Whatever doesn't match with your trade plan, you simply skip it. So let's assume we got a list, and in that list, the very first symbol was ABC. And what are we supposed to do next? On ABC, we need to go to the lower time frame. So the question now is, what is my lower time frame? And we got the answer from our step number 1, that when we opted, I want to plan monthly income trades. My lower time frame was defined as daily. So here lower time frame implies the daily time frame, and on the daily time frame, I need to identify zone. By zone, we mean any of these 4 structures. It can be a drop based rally, rally based rally, rally based drop, or a drop based drop. Now, when I'm doing the analysis, I'm using my demand and supply zone indicator. In fact, you also saw the last week that all these zones which was identified by the demand and supply zone indicator, they worked beautifully for us. So this is a very advanced indicator based on price action, not based on boring, exciting technique, which makes our process very mechanical, faster, and also helps us with multiple time frame analysis. We also have the demo version available for it. So if you search on trading view indicator list demo demand supply zone indicator, you'll be able to find it. You can try it out. But we also have the boring candle indicator, which is an absolutely free indicator. You can use it for free forever. Similarly, we also have the explosive move indicator, which is again a free indicator, and you can use it for free forever. So yes, I will be using the demand and supply zone indicator to make the process faster and easier. So here you can see the indicator is telling us that we do have a rally-based rally zone available to us. So let's mark that zone. So our step number 3 automatically done by the indicator, which was to identify the zone. It has identified the zone for us. Now, once the zone has been identified, the next step is to qualify it. You cannot trade any zone blindly. And for qualification, we have a 2-step process. In step 1, we'll qualify it based on certain conditions. And in step 2, we'll qualify it based on the booster scoring. So the first thing we'll check is that the zone we have identified, is it a case of level on top of level? Now, why do we start with level on top of level? Because if it proves to be a case of level on top of level, we might have to shift from the zone we have already identified to a different area. And how do we verify that? Very simple concept. If you have an intermediate time frame zone and the same intermediate time frame zone divides into multiple zones on the lower time frame. So when your intermediate time frame zone is dividing into multiple zones on the lower time frame, we call it as a case of level on top of level. So what we understand from this is that to be a case of level on top of level, the first criteria is my lower time frame zone has to coincide with the intermediate. If it is coinciding, it might be a case of level on top of level, but if it is not coinciding, it cannot be a case of level on top of level. So let's verify that the zone we have identified, does it coincide with any intermediate time frame zone? The answer is no, we don't have any intermediate time frame zone here. So it's not a coinciding level, and if it is not a coinciding level, it cannot be a case of level on top of level. So gap rules, if you wish, you can apply to it, and the reason for that is if you look at this candle, you can see this is a, oops, just give me a second. This is a red color candle, which basically implies we closed here and the next day we gapped up. Now, if you talk about whether we should be calling it as a pro gap or a novice gap, ideally for a pro gap, we need something like this, that we have been moving down and immediately we've got a gap up. Here we have already moved up for a few days and then we are getting a gap up. So now the question is, how do I define this? Now, ideally, I would just like to call it as a gap. But if I have to put it under one of the categories, should I be calling it as a pro gap or a novice gap? Then you can see if I just go to a bigger time frame, what has been happening here, we have been moving down and then we got a gap up, right? Which basically means that at cheaper prices, somebody was still willing to buy a little expensive, maybe for a bigger fill. So if I have to put it in one of the category, I will definitely put it under the category of a pro gap. So in such a scenario, even if I apply the gap rules, this will be a pro gap for us, and it is an open gap. It is on the daily time frame. Those are the conditions we look for. Pivot non-authenticity not applicable, and unstable equilibrium again not applicable. So after applying all the applicable rules, the fact is only gap was applicable, nothing else was applicable, and none of these conditions, they disqualified the zone. So is the zone qualified for us? The answer is yes. So now that we know that the zone is qualified, we can move ahead to the next step, which is the booster scoring. So for freshness, the zone is definitely fresh, gets a score of 3. We have a gap, or even if you look at the explosive candle, you can give it a score of 2. Time at the zone, we have 3 candles in the basing, gets a score of 2. Reward to risk ratio will be taking as an assumption. Next thing is the location. Now, if I go to the monthly time frame, the indicator will automatically do the curve analysis for me. And the reason is because I've already said that my higher time frame is monthly. So whenever I go to monthly, and since my automatic settings is check marked, it will do the curve analysis by using all the zones. So it is telling me that I am planning my trade middle of the curve, which is a score of 0. Now moving on to the intermediate time frame, the indicator is telling us we have violation of 2 supply areas, which makes it as an uptrend. So at middle of the curve, we can definitely plan a trade. If we are in an uptrend, gets a score of 0.5. Next is move from the zone. We need minimum 4:1, which has not yet happened. So here if I draw my 1:1s and 2:1s, so you can see we are just at about 2:1. So as of now, the move has not yet happened. We'll give it a score of 0. But in case prices, they eventually move up and then start coming back, it can upgrade to a score of 2. It was not a case of level on top of level, not even coinciding. But for trap, I can give it a score of 1. And the reason for that is if I take a horizontal line wherever the proximal is, and let's zoom out and start pushing it up, trying to find an area where prices have been bouncing over and over again. So you can see in the past it acted like support, then it is acting like resistance, again acting like resistance, acted like support, again acting like resistance, acting like resistance. If I bring in a little bit more history, you can see even in the past it has been acting like support resistance. So we have a pretty clean area of support and resistance. And I also showed you this example the last session that when you have such areas, how beautifully they can work like traps. So yes, that possibility of this working like a trap definitely exists. That is where we'll give it a score of 1. So if you look at the overall scoring, we have a score of 10 out of 10 for quality, making it as a high quality setup, but only 1.5 out of 8, which makes it as a low probability setup. So high quality, low probability can be done as a type 2, type 3 trade. So after applying the boosters, we got to know that this is only a type 2, type 3 validity for us. We can't do it as a type 1 trade. Now, no matter how high the quality or the probability, we understand that any trade can be a stopped out trade. So we also need to be ready for the worst case scenario where we'll do a proper position size calculation so that in case the trade does not go in our favor, it goes against us. We do not lose more than what our risk management rule allows us to lose. Now, whenever the prices are back, we'll have to re-verify because the markets are not static. Markets are dynamic. Conditions are changing almost every other second. So we will have to verify, does it still match with my trade plan before the prices are about to enter the zone? If the answer is yes, it is qualified, then we'll place our order based on the entry type, in this case a type 2 or a type 3 trade. And once your order has been executed, the last step is your trade management, where step 1 is 1:1, we'll make it as a break even trade. And after that, if we get the opportunity to trail onto it, we start using our trailing stop loss. So this is how we plan trades, very mechanically, very rule based. And you also saw the advantage of planning trades rule based and mechanically because of the crash that we had on the 4th of June, which was the result of the elections. So, yeah, before we move ahead into the chat box and I see what questions, queries we have, I would like to add, if you're not subscribed to my channel, do ensure you subscribe to it. And you can also join the WhatsApp channel that we just started to be updated with all the videos, schedules, updates, and offers. And if you have any friends or family members who are into trading or they are learning trading, you can share the links to my course content. You can share the links to my channel, to my videos. And yes, let's see what do we have in the chat box now. So today seems like we don't have any questions, queries. So that basically brings us to the end of today's session. Thank you so much for joining in. I will be seeing you now next weekend. Till then, trade safe. Enjoy your Saturday. Take care. Bye bye.